Good evening, everyone. I am Vaishnavi Vaiti from Kirin Advisors. Welcome to the virtual roadshow of Deccan Transcon Leasing Limited. Today, we will provide a brief overview of Deccan Transcon Leasing Limited. Deccan Transcon Leasing Limited is engaged in providing tank containers on lease and logistic and supply chain solutions to clients in various sectors. The company specializes in transportation of bulk liquids and hazardous chemical, primarily utilizing the tank containers as mode of transport. From management team, we have Mr. Jaydev Menon, Chairman and Whole-time Director, Mr. Rajiv Menon, CEO, and Mr. Sumit Kothari, CFO. Good evening, sir, and welcome everyone. We
Evening.
also have Mr. Deepka, Senior Manager from Unistone Capital Private Limited. Welcome, sir. Good evening. Now we
Yes.
will start with the company presentation. I hand over to Jaydev, sir, to give us more insights about the company and its future plans. Thank you.
Good afternoon, everybody. It's a pleasure for me to address all of you, speak a little bit about our company. So, this company was established in 2007. It's been a long journey after that. It's primarily we look at providing logistics services, which covers a large ambit of moving goods by ship and also other allied services. We also engaged in leasing of containers, and in that space, what we do is we lease some specialized containers which are used to carry uh, chemical cargo, which are hazardous in nature. So that's one of our primary businesses that we've been doing, along with other logistics and shipping services. Over the years, we've been able to build up a fairly large network, which currently expands to over 40 countries. We continue to add on more territories as we go further. And so, with this kind of a global coverage, we are able to cater to a large section of our customers' demands, and our customer base has been growing year on year, and I think today it stands at over 750 customers. So we have starting off from uh, 2015, I think, when we really took momentum. We were this company which was operating about 30 tank containers. We have now a fleet size of about 2,500 ISO tank containers. We've also just forayed recently last year into box containers. We've added about 750 box containers to our fleet, making a total of about 3,300 odd containers which we operate ourselves. Our company, I mean, these are figures I think a little earlier, so a few months earlier. Uh, we are today at about almost a little over 90 people employed in the company. So it's been a long journey since 2017, 2007, and I started engaging in the company a little more actively from 2014 onwards. There's been some change of ownership during that course. So, as I told you, from 2015, the company has grown in terms of our fleet size and in terms of our operations, network, and everything. So, as you can see in the journey, we established our subsidiary office in Malaysia in 2018, where we currently do a lot of our operations. Global operations are based out of Malaysia. In 2019, we also acquired a 44% stake in a company in Thailand. So we've got our own staff sitting there. So we pretty much do our own operations, our own sales and marketing in Thailand. So in 2020, I mean, as our network continued to increase over the period, we also acquired in 2021 47.5% stake in Indian company called Kingstar, uh, which was engaged in the business of selling, I mean, freight forwarding on ISO time containers. So we had some strategic interest in that company, and so we acquired 47.5% of that company. In 2023, we bought our own office in Hyderabad, which we are now speaking to you from. And this is located in the high-tech city of Hyderabad. In 2024, we have changed the constitution of the company from a private limited to a public limited company. Now, as far as the management is concerned, I mean, I am the promoter and managing chairman and managing director of the company. I'm a mechanical engineer by profession, studied in Usmania University, been in various industries. Most of my time has been spent in the logistic industry in a couple of companies. Kartika Menon is a full-time director of the company. She is responsible for our human resources, for our so she's heading our HR department. So she's responsible for various kind of training programs and recruitment and other HR activities related to it. Shekhar was also one of the original founders of Deccan. Uh, he's been with me even in my during my past um, uh, roles, and he looks after some of our operations in certain countries like Africa and Asia. And we have three independent directors who've joined us this year. The first one being Viju Parameshwar. Uh, he is an IIT graduate and also got his my MS from the US. Came back to India, spent a lot of time in India, working in various companies. He's been director of a couple of large Indian MNCs, the last one being a German company, which he helped set up Indian operations. Uh, Satyamurthy Ramsundar is the other independent director. He is a chartered accountant by profession. He is comes with a lot of experience. He was one of the initial members of the team that Pepsi recruited way back in 1991 when Pepsi wanted to enter India. He was responsible for taking over a lot of these bottling plants of Pepsi. So he played a very key role in bringing in Pepsi into India. And I think subsequently he was the CFO of Pepsi India. Later moved to the US, and I think later he was in Whirlpool, came back to India, and now he's retired. He is one of our independent directors, and we look at them for guidance and kind of taking us you know further into our journey. Miss Lavanya is an engineering student from JNTU in Andhra. She is a member of the Cost Accountant of India. She's a practicing cost accountant and has more than 12 years of experience in cost accounting. She is based in Hyderabad. Thank you. Over to Rajiv.
Yeah, hi, my name is Rajiv, and I am the CEO of the company. Jaidev gave a view of what the history has been of the company and where we are as of date. To give you a little bit of flavor of what the industry looks like. We are in an age where everything's becoming digital, but ultimately, products have to move, goods have to move. So the logistics industry, as obviously, is something that's growing. It's growing at a 4% CAGR year on year, depending on what source you look at. The sizes vary, but suffice it to say that it's a very, very large market, and we are, a really tiny part of it. But what's worth looking at is the fact that we've grown, albeit at a lower base. We've grown at, almost 4 times that or 6 times that growth rate that the industry is growing at. We are largely, a large part of our business is in the liquid transportation space, which is containerized liquid transportation. There are roughly, like it says, about 850,000 tank containers in the market today, of which we own about 2,500 is all that we own. So there is great scope for us to increase our presence in that. So the growth trajectory is the runway is very large. What is also worth looking at is the fact that this market's fairly consolidated at the top end. The top 10 operators own about 50% of the fleet. So it's fairly consolidated there, and therefore giving us the opportunity at the bottom end to consolidate and grow faster. Apart from the global industry and its growing nature, I think very specifically in India, I think there is a lot of emphasis put by the government on this industry, where it's coming to building ports and infrastructure, where it comes to regulations on usage of specifically ISO tanks. So there's a lot of focus that's there. So we are sitting at the right place, and we'd like to think at the right time for us to embark on this next step in our journey. If you look at the 2 broad classifications, the lines of business that we have the tank container leasing business, which is a small portion, but it's steadily been doubling almost every year on year for the last 3 years. So we're still at about 5%. 6% of our business comes from that, but the rest of it comes from providing shipping and logistics services to our clients. Yeah. If you look at the revenue from geographic perspective, about 40% of our revenue comes from India, and the rest from outside India, and the percentages move around a little bit depending on the variability in the market. Asia still continues to be a very large part of our business, and one of the things that we're doing is to try and consolidate our position in Asia, as well as try and expand our reach into the other continents. Over to Sumit.
Hello everyone. Sumit here, CFO of the company. So I will quickly take you to the financial summary of the company. So over the last 3 years, our revenue from operation has, in 2022, we were at 15,290 lakhs, which has increased in 2023, but again has came to the level of 15,255 in 2024. The major reason for that was drop in the sea freights and increase in the volume, so it remained constant. We had a PAT margin of around 7.75%, ROE of 45% in FY24, ROCE on 41.43%. Our debt equity ratio was around 0.82 in financial year 2022, which has reduced to 0.72 in 2024. Over the last 3 years, we have shown a consistent growth in our PAT margin. So this is a broad overview of the financial summary. The detail of the financial are there in the RHP and prospectus. So if we see in terms of peer comparison, so our major peer, listed peer, are Lancer Container, SJ Logistics, who generally are there in the logistics services only, but the broad part of their business, a small part of business comes from the liquid logistic, and our broad part of the business comes from the liquid logistic. So there is a small difference between both of us and our positioning also. So this is a brief comparison of how our peers are there and how we are positioned among our peers. So in terms of PET margin, if I compare, we are at 7.75%. Lancer is at 9.21% and SJ Logistic at 8.3%. In terms of return on capital employed, we are at 41.43% as against 15.82% of Lancer Container and 25% of SJ Logistic. So this is the financial summary of our company for the last 3 years. So, like I said, revenue I already explained also. So we were having a PAT of 1181 lakhs as compared to 855 lakhs in 2023 and against 519 in 2022. So this is overall view of our balance sheets. We are growing on the asset side also and on the business side also. Now coming to investment rationale, I think Mr. Raj.
Yeah, I'll take this. So, kind of to conclude based on what we just saw from what we've done in the past and where we are looking to go in the future. Like I explained, we are in a large market. It's a growing market. So that's the fact that we have a lot of runway to occupy even a small part of that market size is a good gives us good room for growth. We have really some marquee investors who are already part of our investor group. In fact, like it says, members of the promoter group of Galaxy Surfactants, Mr. Hemant and Mr. Ramakrishna are both part of our investors. The other things that we are building up on and the fact and what we have, one is something that we're really proud of, and that's something that we have taken the last 15, 17 years to build, is our network of agents. It does not happen overnight. This also provides a good solid entry barrier, because that's something that takes a lot of time to build. And we saw that we are in about 40 odd countries today. We expect to be in more. Part of the funds that we're using will go towards creating that, expanding that, the geographies that we are present in and the geographies that we can serve our customers in. We have excellent ability to provide a wide gamut of services across the logistics space, whether it's customs clearance or trucking or other services that are very tailor-made to customers. So that's something that keeps our customers close to us and prevents entry of competition. So that's something that we treat as something. We treat that as something that is close to us and keeping our customers close to us. We've been around for almost 15, 17 years now. So we have a very, very strong, long-standing business record. We've shown profitability throughout that time. And a large part of the proceeds from this issue is again going to finance a lot of increase in our asset portfolio, increasing our fleet size, and also, like I said earlier, expanding our geographic coverage and reaching more customers across the world.
So, thank you. First of all, I would like to thank everyone who has joined this call. Apart from the management, we are always thankful to the management. Excellent company and detailed insight given by the management, the promoters, as well as the CFO about the company, the financials, the business, and the overall fundamental analysis of peers also. So, just to brief all the participants and investors, stakeholders here, the issue is opening now that the anchor round today is already on, it is going to end very soon. Tomorrow, the issue is going to be open. The issue is open for 4 days since there is a bank holiday and the exchange is working. So from tomorrow, that is Friday, September 13th, then there's the next working day, that is September 16th, 17th, and 18th. That issue will be open for 4 working days. The issuer company is offering total 60 lakhs 24,000 equity shares, out of which there is 5 lakh shares which is for offer for sale by promoter group selling shareholders. The price band is fixed at 102, that is the lower cap, to the 108, that is the upper price band of the company. The tentative issue size as the price at the upper price band is 65.92 CR. As you can see the screen, the post issue market cap again at the upper price would be around 245 to 250 CR. And just to again highlight the issue structure and the issue offer period, after closure of the offer period, the tentative listing is going to be on September 23, 2024. And the minimum bid lot size is, since it is getting listed on the emerge platform, SME emerge platform of National Stock Exchange, the minimum bid lot size is 1200 equity shares and multiple thereof. Yes, Vaishnavi, you can take from here.
Thank you. Now we will start with the question and answer session. I request all the participants to put the questions in comment box. So first question is from Mr. Anurag Shah. How does the contract with customers are entered in? Is it a periodic contract or volume of material to be handled?
Okay. So I'll take that question. Anurag. So we do both kinds of business. So we have a lot of our leasing business typically is slightly longer term contracts, anything varying from 3 months to a year. We don't do it based on volume of material. It's largely based on periods. And in the case of our shipping and freight forwarding business, that's more. Uh, we again have two. One is when we get orders for uh, point A to point B movement, and we also have larger customers with whom we have uh, who come out with tenders where we quote for business that lasts for maybe 2 or 3 months, but until they rebid the whole tender. So uh, that's the last. That's the other type of business. Yes.
Okay. Next question, please. Aditi Menon. Currently, we have 2,300 containers. Are they owned by the company or taken on rent?
We have both. Uh, we own about 300 or we have fleets of about 330 that we actually own outright, and the balance are leased.
Next question, please. Devesh Purohit. What is the average realization per container per trip?
Yeah. So average realization in terms of revenue per container per trip, it's around 90,000 INR.
Okay. Next question, please. Arjun Verma, please explain your business model.
So I think we already explained, but yeah.
Yeah, if there's anything specific, we'd be happy to do that, but
This is what like told you, Rajiv explained, we have two models. One is we lease time containers, and we also are involved in UCC operations where we move in chemicals from uh, the 40 countries that we operate in. So that's our primary business model.
Okay. Next question, please. Anurag Shah, do we use our marketing network to back contract or it is through tendering?
again, it will be a mix of both. Maybe even for tendering, we actually have to do a lot of sales activity. And we also have sales people in the offices that in the locations where we are present. That's uh, one of the things that we are trying to increase our presence in multiple countries. And there are some customers with whom we have who come out with tenders where we have to bid either directly or through our partners in countries where we are not present.
Next question, please. Arjun Verma, how will the fleet expansion enhance your capabilities in meeting client demands?
So it does two things for us. One is, obviously there is more fleet, which means that today if I'm able to do X number of loads, tomorrow I'll be able to do X plus whatever we add this to. Uh, uh, from a fleet standpoint, just volume increase and therefore increase in our loads that we are doing. Second, I think it also helps us increase the number of countries that we are going to today. Today we are maybe restricted to a certain geography because of a certain fleet size, but once we have a larger fleet, we are able to cover other countries that we were not able to cover before.
Next question, please. Sachit Gupta, how is the demand shaping up for this vertical? Have you entered into contract with any customers?
Yeah, we have, like I said, some of the leasing business revenues that we have are contracted for a slightly longer period. In terms of demand, we did see a low which lasted until the early part of this year, but over the last 6 months, we've seen demand picking up.
Next question. Krisha Damani, what are the reasons for the drop in revenue?
Yeah, so like explained earlier also, in 2000, late 2022 around October to November, the real CV rate has started declining. It made a bottom in around February 24. The drop was huge. So due to that reason, there was a decline in top overall revenue. But as we were able to increase our volume, so if you see the figures, it's so lesser degrowth than what it should be if you would have operated at same volume as compared to FY 22.
Next question. Jay Bakshi, what is the typical profit margin in the global business sector? Is it better than domestic market or its volume gain?
So basically, profit margin depend on the various political situation also. If it is market is taken like currently from last 4 year, 5 year, we are seeing sometimes it is COVID era, then post COVID supply chain disruption, and then now again Red Sea issue plus Russia Ukraine war. So these political geopolitical situation keep changing our profit margin, and we need to align our strategy also. But overall, general margin is in the same trend both in domestic market and global market. And also, as our volume grew, we have a capability to book the space on the ship at a lower rate and that will help us in achieving that will help us any organization achieving higher margin.
Okay. Next question, please. Anandi Mittal. How are our payment terms? Do you receive any advance?
Yeah, so generally, our customers are major chemical, specialty chemical companies, large listed players. So we have a credit term with them, and we don't receive any advance from customer except if it is a small cargo which we are booking for customer, like in dry boxes where we have started doing that thing, or if it is payment against PL, unless we have a credit period ranging from 30 to 120 days also.
Next question. Tara Kaur. What are the expected benefits of expanding your tank container fleet?
I think I answered that. But I can repeat. Uh, One, like I said, increasing our volume of shipments that we're doing. Two, increasing the reach that we have across a larger geography. And three, which I didn't mention earlier, but what Sumit mentioned was also as the volumes go up, our ability to leverage that to buy better rates, reduce our costs also improves.
Next question. Jay Bakshi. What is our working capital cycle?
Yeah, so currently our working capital cycle is almost 95 days, where we have a credit of to customer on an average of 100 and 102 days, and we get from supplier is almost 11 to 12 days.
Next question. What is the repetitive orders?
So in terms of repetitive order, we can say that almost 100 customer and the two top uh, player in the chemical segment are associated with us from last more than 3 years, and more than 50 are associated with us from last more than 7 years also. So in this type of business, generally we need to quote on tender basis also plus shipment basis also. So there is a good percentage of repetitive transaction with the same company, and it depend repetitive order depend on the location also, like that location we need to take from that customer, and plus supply and demand of the customer also from the respective region. So as of now, on the repetitive order, yeah, we are serving most of our customer on repetitive basis from last 2 years. And as I mentioned earlier, almost more than 100 customers are with us from last 3 years.
Okay. Next question, please. Ananya Swaminathan. What is the average rate of container?
For buying a container or
Yeah, yes. Today's price is probably around $15,000 for a container, and it's largely variable based on stainless steel pricing.
Okay. Next question. Navya Bhatnagar. What is our current fleet size and how many are utilized for carrying bulk chemicals and hazardous material?
So our fleet size currently is 3273. Out of that, we own tank of almost 2,523 tank, which are entirely deployed for carrying chemical and hazardous material, liquid cargo. So
Okay.
bulk cargo is there, but generally we do that on occasionally basis based on our order and our port pair.
Next question. Hardip Bedi. How many days in advance we need to place orders for containers?
that actually depends. I mean, there are people who probably, tell us that I need a container to be picked up today, tomorrow. Some of them. This is what you're talking about, buying a container, or are you talking about shipping a container?
Shipping it.
Okay.
Yeah, if you're shipping a container, I mean, we kind of, I mean, it's based on the customer, based on the situation. There are people who ask us, can I pick it up in the night? There are people who say, like, I need so many containers, this month. They specify days in which they would pick up 4 containers this week, 5 next week. So it's a multiple segment of kind of customers that we have.
Okay. Next question. Sadika Naran. What is the capex incurred for our fleet size of 2,500 containers? What is the payback period?
So as I mentioned, our 2,523 tank container, which we have in our fleet, out of that we own almost 312 tank container, and we spent almost around 10 to 12 CR on purchase of that tank containers. And generally, if you buy a new tank container, depend on the interest rate. If you are getting at around 9 or 10% interest rate for purchase of tank container, the payback is almost around 8 to 9 years. And plus, the positive thing in this type of tank container is there that its useful life is almost 30 to 33 years. And after that also, although it can't carry the cargo, it can be used for storage also. And post that, it can be scrapped, which fetch you much more higher value based on the current price of steel, because the scrap container itself consists of 3.5 ton of steel, which roughly comes around 3,500 to $4,000.
Stainless steel, not common steel. So stainless steel is expensive. So the scrap value of stainless steel, even if the container, if you sell a container which is 30 years old, is still fairly high. So there's a good residual value even if you look at, selling the tanks after you've finished using it.
Next question. Krisha Damani. What is the revenue and profit growth you expect over the period of next 3 to 5 years?
So for the past 5 years, we were growing at a CAGR of 28.5%, and for the future year, we will try to achieve the same level.
Okay. Next question, please. Rahul Jain. What certification you need to carry hazardous material?
Um, there is no specific certification, but we are guided by the IMDG rules, which is specified. It's a world body specification defined by the IMO. So we need to conform to the norms of the IMDG regulations to carry any hazardous chemicals. The container that we carry are certified to carry hazardous chemicals. These certifications need to be renewed every 2.5 years. So every 2.5 years, like a truck or a car, which goes in for a test certificate, we have something very similar. It's normally certified by companies like BV or DNV, which are global bodies which test the container and certify that this is fit to carry hazardous cargo.
Next question, please. Shantanu. Please explain our receivable in days for domestic as well as overseas business.
So more or less, our receivable for domestic and overseas business are on the same level. Like in terms of India, it is almost around 105 days. In terms of our global operation from Malaysia, which we are carrying, it is around 99 days. So it's generally in the same trend only, because as we are dealing with large player in the group, and to add and retain them, we need to extend the credit period.
Next question, please. Rahul Jain. Is margin on hazardous waste comparatively high?
Well, I mean, it's liquid logistics is a different um, kind of a thing from dry business. So if you're comparing the prices for a dry container versus a liquid container, yeah, obviously it is higher um, to carry hazardous cargo as compared to carrying a normal cargo in a box container. But if you're looking at um, non-hazardous liquid cargo versus hazardous liquid cargo, there is some marginal difference in carrying hazardous cargo. It's not big, but it's marginal.
Next question. Mohit Daga. Can you tell your cash conversion cycle for last 3 years?
So I think we can explain this maybe on email or any other call. That would be good.
Okay, sir. Next question, please. Raj Gandhi. What is the cost of purchasing the container and what is its life cycle?
I think we already explained it. So roughly buying a tank container, like the model is visible also in the with us also now. So it costs around $15,000, $14 to $15,000, and it has a life cycle of almost 30 years. More than that also it will use, and it is like we said earlier, it has a good scrap value also. Post useful life of 30 to 35 years.
Next question, please. Ajay Gupta. What are our competitive advantages?
Yeah, I mean, um, we are in a kind of a slightly niche segment. Like if you look at the dry box operators, there are many very large players. There are medium-sized players. There are very small players. But isotank industry is like Rajiv had explained earlier. The entry barriers is fairly quite high because the two things: a it requires certain amount of technical knowledge to be handling hazardous cargo. The equipment is extremely expensive, so unless you have a very strong balance sheet and knowledge of this industry, it is difficult to even get anything on lease. Buying, of course, is like I told you, expensive. It's $15,000 for a container. Even to get 100 containers is a lot of money. So entry barriers are extremely high. So as a result, the number of players in the market are limited as compared to what you would find in the box container business, which is extremely competitive.
Okay. Next question, please. DK. What is the long-term nominal industry growth rate over last 10 to 15 years?
What what the research that we have shows us is about it is growing at about 4 to 5% year on year over the next at an industry level.
Next question. Harsha Joshi. When do you see next round of fundraising?
I think that is too early to answer.
Next question, please. Bhavin Garg. How might interest or exchange rate fluctuations affect your funding?
Yeah, so right now, like exchange rate fluctuation, I think we are pretty much okay with that because generally all shipping rates and everything are being quoted in US dollar denomination. So in terms of like our Malaysian operation, that is being completely carried out in dollar term. Even collection and payments are also done in dollar term. So that doesn't impact much more on our Malaysian operation. On Indian operation, we have uh, a natural hedge as we have a receivable being booked at the spot rate, and the same is the payment at being spot rate. Only the difference come as in terms of whatever assets we have added uh, by taking USD loans. So that is a minor impact which we have on that. And in terms of interest, yeah, so right now we have a debt. So a reduction in debt will reduce our interest burden, which is will definitely increase our EBITDA impact.
Next question, please. Pratik Raval, how does managing and maintaining tanks work? What is the average ideal time for a tanker out of 2,500 feet?
That's ideal.
Yeah,
Yeah. So, managing and maintaining. So, if let's say a tank goes from point A to point B, it drops off the load, comes back to the and is dropped off back at a depot. It goes through a cleaning cycle. The cleaning will depend on what kind of cargo was carried in it. So every different kind of cargo has different kinds of cleaning procedures that those depots need to follow, which means you must have depots that are capable of doing all of these in multiple countries across the world, which is why I said that creating that partner network across the globe takes a lot of time. The idle time typically we look at is in the range of about, again, depends on where we are going to and whether it's if I know that that's a place that I'm going to come back from with the load, we try and book early on, but otherwise it stays there. It could stay there for as much as a month. Sometimes it might come out in 3 days, but that largely depends a lot on what the location where we are and the kind of market situation we are in.
Okay. Next question, please. Lavanya Balakrishnan, can you provide details on the percentage of stake held by promoter group in Galaxy Surfactants Limited, which is approximately 1.52%?
Promoter group of Galaxy hold in our company approx 1.52%. This 1.52% are held by Galaxy promoter in Deccan.
Sir, can we move forward to the next question?
yes.
DK, what is your market share in the industry and how you plan to increase it?
So,
Is this, are you talking about the global shipping market, which is very, very huge, or are you looking at the tank container market, or are you looking at the Indian market? Okay, in terms of what I can to answer this question in one specific way, I would say that as far as a tank operator is concerned, we are the second largest India-based tank operator within the country.
Okay. Next question, please. Reason for increase in PAT margin in financial year 24.
Yeah, like I explained earlier also, in terms of revenue, when we were saying about revenue was stagnant, a decline compared to last year. So I inform you that we have our volume has increased. So that added to our bottom line. Apart from that, our revenue from leasing services has increased, which has directly affected bottom line because the cost associated with that leasing operation majorly is of depreciation and interest.
Okay. Next question. Anurag Shah. This was a very live presentation. I want to thanks to the management team and wish them all the best for the IPO.
Thank
Thank
you.
you.
The best wishes for the IPO.
Thank you so
Thank you.
much.
Thank you.
I think we have covered majority of questions. Thank you, Jaidev sir. Thank you, Rajesh sir. Thank you, Sumit sir, and thank you, Deep sir. All the best for the IPO.
Thank you, Vaishnavi and the team. Thank you everyone for joining.
Thank you.
Thank you.
Bye bye.
Yes, yes, bye.